Good morning, y'all. You're listening to Insure for Life with Stacey Gregory, where we talk love, money, and the legacy you leave behind. I'm your host, Stacey Gregory, and today we've got a true professional in the studio today. 25 years in the industry, a master of protection strategies, and one of my personal go-tos whenever I need clarity or guidance. Please welcome Josh Cottrell, a seasoned expert in the business, a trusted resource for agents and families alike. Josh, I'm excited to have you
absolutely.
here today.
Excited to be here. Yeah.
So if you'd like to tell us a little bit about yourself.
Like you said, I've been in the industry about a little over 25 years. Got started in Florida, and got a wife that I love, a son that's 20, will be 24 here in December. Okay. And been doing this a long time, and just love to see that we can help people and help them with their financial needs.
Today we're going to talk about the number one thing that people say that they have. I have life insurance on my job. And it dawned on me yesterday that I've met thousands of people over the 17 years I've been in business. And I would say 98% of them have insurance that they had on the job. So these people now are older, they're on a fixed budget, and they can't really afford what they need for their final expenses. So what has your experience been with working with people that say they have insurance on the job?
Well, typically people that say they have the insurance on the job, what they're telling you is, hey, I've got it taken care of. I've got it covered. And what they don't realize is that is the company's insurance. If the company changes insurance, I had that happen to a good friend. Her husband is disabled. And when they went back, the company changed the insurance. He wasn't able to get on the coverage anymore. There was a whole lot to do with that. Things happen that people don't realize. It's always good to have your bases covered in a lot of different ways. Having as much insurance as you can at work is a great financial tool, because typically it's inexpensive. The thing is that if you leave that job, you quit that job, maybe you decide you want to work for yourself. A lot more people are working for themselves today. They're not going to have that opportunity to get that inexpensive coverage. So, the old adage, don't have all your eggs in one basket. Too many people do that, or they just don't look at it. Many times what I find is people are telling you they just don't want to take the time to look at things. Oh, it's already covered. It's already taken care of. And so we want to make sure that they have their financial needs met, so that later in life, as you're saying, they're not going and scrambling to get high-cost final expense insurance. They do honestly have it covered outside of that. So,
so that's it. So and people now, when you're younger, like I'm 53, and you can get insurance where it's paid up when you're 65, so you can pay for it while you're in your working years.
Sure, absolutely.
And then once you retire, you can structure it so that it's paid up, so that you no longer have to pay premiums when your budget has changed, when your income has changed. So do you find that a lot of people take advantage of that, or they?
It's kind of ironic that you bring that up. Yes, just yesterday I was talking to a guy, and he goes, hey, when does this policy mature? When do I have to quit paying on it? And it's like, well, honestly, age 95 is what this is structured to do. He's like, I don't know why I took that out. I said, probably price and everything else. So, but we can restructure it and have it paid up by the time you're 75. And he's in his 60s. And he goes, man, if you can do that, I would absolutely love that. And so we got to find strategies that work. And sometimes you can find those ideas that'll help somebody and get them to a point where, hey, they're not paying for it for the rest of their life.
What other strategies do you have? I've talked to you a lot about doing reduced paid up. So you can tell us what that looks like, having a reduced paid up policy. So
some folks do not realize that life insurance that they've had for a period of time, typically this is not going to be something that's at work, but that they have options to make it a reduced paid up policy so that they're not paying premiums. Now, what I like to do technically, Stacey, is if they've got, say, a $50,000 life insurance policy, it can be reduced paid up for $25,000. We're just giving an example. What I like to do is take that money that they're spending there, and typically I can buy them more coverage with that same money. So their $50,000 becomes $75,000 or $100,000. Because there's some options to do that. And so I like to try to find creative ways to give them a bigger pot. Everybody wants a bigger piece of the pie or a bigger pot of gold, and I try to create a bigger pot of gold for them.
And what I found is that people say that they have enough. So if they do own their policy and they may have enough just to bury them, but they have a house that still has a mortgage and maybe have other things, and they say, I want to leave my house to my children. But then the question is, if you passed away today, are your children in a position to pay your mortgage and their mortgage? Because I know I have a 23-year-old daughter who lives in Harlem, New York. She's not coming back here to live. My son is at Howard. He's 18. He's not in a position to pay the mortgage. So the ideal situation would be that we would have enough insurance that would pay our mortgage off so that they wouldn't be left with the burden of either losing the house or not knowing what to do to make payments on the house.
There's so many different options, and you know this, so many different options out there, ways to do it. One easy way is to look at low-cost term insurance, to have something, and there's a lot of companies out here that sell term insurance, but not all of them are selling something that is as affordable as others. So you have to be careful, you have to shop around, you have to look for it, and find out how many years you've got left on it, kind of make an estimate. I don't know what a typical mortgage is today, 350, something like that, maybe a typical mortgage. And you find out what you need. Maybe you don't need that whole money. Hey, I only need like 200,000. I want to make sure that I've got 20 years covered as I'm paying down this mortgage. And it's a great strategy to make sure that your family is not stressing out.
Now, Josh, how can people reach you if they have questions about?
They can absolutely give me a call. Phone number 804-914-1191. You can text me. You can call me. You can email me. Email at Josh, JOSHLAURA 2000 at gmail.com. And so either one of those two ways, you can give me reach out to me and be able to help you out with those things.
And Josh, he answers his phone all the time. I don't think he ever takes time off. So what about these people say that term is a waste of money? And then what about being able to convert it to a permanent policy? Because I don't think people know that they can get a large amount of life insurance, a term policy for themselves while the children may be younger. And then once the children get older, they don't need as much coverage, so they can now convert it over to a permanent policy. How does that work?
So typically with every company, there's some type of conversion option in a term to a certain period of time.
Okay.
And so if you were healthy, 5 years ago and today you're not as healthy, you don't have to go through the whole underwriting process again. You don't have to make sure you can get covered. What you can do is typically every company allows you to convert all or part of it to some type of permanent insurance. And so typically it runs to about 80% is what kind of the average, the industry standard is, to 80% of the life of the term. So, just figure that out what it is. There are differences, but it's usually a very simple process, and it's automatic. It is guaranteed, and while you'll be paying a new premium because you're buying a permanent life insurance, a whole life or an IUL, the price is going to be more. You have that locked in, and you don't have to worry about later on down the road losing that term insurance.
So when you have people say that I can't afford insurance, term is a way to get into the game. You get what you can afford. I quoted a man, he had an 8-year-old son. He's 35. He could get $500,000 worth of coverage. I think his premium would have been $20 a month. So he goes from $20 to $500,000 for his 8-year-old son, and he doesn't have anything down. That's enough to get him in the game. Yeah. And then he can convert it over to a permanent policy once his finances change. Yeah,
once finances change or the situation changes, because he's got a lot of debt. He's got a young kid.
Yeah.
So the kid's going to get a little bit older. Hopefully, things never get a whole lot cheaper, but hopefully a kid gets independent, and you can do something with that to make sure you have some type of coverage. So some great strategies out there. You just got to look at them, talk about them, and do your homework. So not just flippantly do something right off the bat. So got to kind of get you some ideas of what's out there.
So Josh and I work together, and we have policies that have been on the books for 20 years. And at the time, 20 years ago, maybe $10,000 would have been enough insurance to bury you. But we all know today that's not enough unless you plan on being cremated. So I think the key thing that you want to do is make sure that you speak with an agent annually about your policy. We can review it to let you know where you are. Things change so much in the industry. You may have an outdated policy that doesn't give you benefits like living benefits. What are living benefits?
Living benefits for most carriers will allow you to use your life insurance if you have a heart attack, a stroke, some type of major illness, or if you end up in a situation what would typically put you in a nursing home, you can use the life insurance while you're living. So living benefits are a great tool to make sure that you have all your bases covered. And so you need to look for policies that have those, because if you can get those and you're eligible, typically they don't cost you any more.
And what I found is people seem to be excited about having cancer policies, but these cancer policies only cover one thing, cancer, and the premiums are just as high, very high, as you can take that same cancer policy money, put it into a life insurance policy that has living benefits, so you get more bang for your buck. So we talk to people, we like to talk about the new modern policies that we have.
So just as a phone has changed, like the cell phone, the cell phone here, I use it all the time. It's changed. Life insurance policies have changed and adapted and allow you to adapt to your specific circumstances if you understand what tools you have available. And instead of having a cancer policy, put more coverage, increase your coverage in your life insurance policy and cover that need as well. If you have these living benefits, you don't have to use the entire policy to take care of those things. You can use a portion of it, typically with the living benefits. One of the companies that I worked for years ago kind of spearheaded this whole thing, and it's changed the industry.
Yes, it covers critical, chronic, and terminal illness. So if you have an accident, you can't do two of the activities of daily living. You can get money while you're living. A heart attack, stroke, cancer. A lot of people now have Alzheimer's, dementia. People need long-term care benefits. So we also can include long-term care in insurance today, right?
Absolutely.
So it's another way. Than before, long-term care was a standalone product, and it was very expensive.
The thing that I see that I've always said about the long-term care is that you can use these living benefits, have long-term care, but there's also long-term care riders available.
Yes.
And that give you even more benefits. The thing is that with a long-term standalone long-term care, you may pump in tons of money. I have a deacon in my church that has had to end a policy after like 30 years because the premiums got out of control. The great thing about the life insurance is your life insurance policies typically, your rates are not going to change. And so you can have one policy that does multiple things.
And if you don't use the living benefits or the long-term care rider,
you've got the life insurance.
The life insurance, you can leave like a legacy for your family. Again, can you tell Josh how they can get in contact?
Absolutely. 804 is my phone number, 804-914-1191. That's the best way. You can call or text me, or you can also email me at joshlaura, JOSHLAURA, 200@gmail.com.
And I'm Stacey Gregory. I am your life insurance and estate planning expert. If you have any questions or you want to reach out, give me a call, 804-539-6397. You can also go to my website, StaceyGregoryInsurance.com. If you only have life insurance on your job, we need to talk because you're doing yourself a disservice. You need to own your own policies. So I hope this information has been helpful, and we'll see you on the next show. Take care.
Excellent.